Welcome everybody to episode 16 of the Safello Show. We have a great panel for you today with three venture capital firms joining. We'll briefly touch, of course, on the situation in the Ukraine. Before that, I'll do a quick sponsor message, which is Safello. So for those who don't know Safello, safello.com. Download our apps, iOS, Android. Scroll all the way down if you want to engage with us in our Discord, or obviously subscribe to this YouTube channel, or wherever you want to follow us or engage with us. For those who are interested in our stock, we're listed on NASDAQ First North with the ticker SFL. You can go to our investor page, safello.com/investors, to find the latest press releases and follow everything that we're doing with the company. Okay, with that said, I'd like to introduce our panel today, starting with Ellen from Augmentum. Welcome, Ellen. I'll just introduce everybody first, and then we'll go a little bit on the background for everyone. Next is Susie from HV Capital, Susie Meier. Welcome. And last but not least is William from Northzone. Welcome, William. Adding William. There we are.
Hey, everyone. Hey, Frank.
All right, so let's do a quick introduction from everyone. Maybe, Alan, you'd like to tell a little bit about Augmentum and perhaps your role within Augmentum and your focus area?
Yeah, absolutely. So, hey, everyone. It's great to be here today. Augmentum is a fintech-focused fund. Our team is mostly based in London, and our primary geographical focus is in Europe, though we can invest a bit of our fund outside. And interestingly, it's been crypto that's kind of taken us beyond Europe. Like Safello, we're actually a listed company too. So Augmentum's listed on the London Stock Exchange. And our team has some pretty interesting operating experience, which we bring to the table, former founder operators from the fintech landscape. We've got 25 companies in our fintech portfolio at present, names including Gemini, Onfido, Grover in Germany, Tide here in the UK. And I've been leading on crypto since I joined the team in 2019. We've now got 4 investments in the space. I'm sure we'll go into them later in the conversation. But it's an area we're really excited about and kind of pursuing 2 different investment themes. Again, I think we'll touch on that in the discussion. Yep, I'm part of the investment team, as I said, covering crypto and a few other areas. And yeah, very happy to be here and share some thoughts.
Thank you, Ellen. Next, Susie.
Sure. Talking a bit about HV. So as many of you probably know, we're a very German fund. The origins have always been the country. But then again, when we talk about fintech, I mean, it's a cross-European effort because there's so many different players across the different countries today that we really want to get a good feel for what's happening across the UK, Western Europe, and especially DACH. So as a fund, we're today on Fund 8. This is a 530 million fund, out of which the large majority goes into pre-seed, seed, and Series A, so quite early stages. And hence, it's really crucial for us to form a proper thesis around what we actually believe in. And I guess, Web3 is one of the phases where we believe that there's a lot of things we could possibly look at, but on an infrastructure level, we spend probably the most time around B2B, and then go really deep into the layers around, layer 1, layer 2, how we think about application protocols, and sort of going slowly to the top end around NFTs and DAOs, but just to phrase the conversation. And lastly, I think we traditionally came quite off a Web 2 perspective, probably as many of us, and have been transitioning, just like Ellen back in 2019, more toward Web 3. And so this is where we spend probably most of our times today, as I call it, the rabbit hole, which is not a new expression, but it's great to see other people around the table who equally got stuck in the rabbit hole. So thanks for having us.
There's also a great podcast called Rabbit Hole by the New York Times that goes into the algorithms of YouTube, for those who don't know. Thanks, Susie. William.
Thanks, Frank. And thanks for having me. It's great to be here. Northzone, we've been around for 25, 26 years. We're a European/US fund. Latest fund is Fund 9. It's a $500 billion fund. We operate out of London, Stockholm, and New York. Generalist fund, but have been investing pretty heavily into Web3 since 2015, 2016. It's along a few axes. We'll probably get into that a bit later, but there's definitely the DeFi track, kind of wider Web3 track, and then the kind of more middleware/infrastructure stack. And great to be here.
Thank you. So yeah, we touched upon it in the beginning of the show. Obviously, we're not going to spend the entire show on this, and we want to go into the thesis. But we wouldn't be remiss to mention that obviously today has been a pretty awful day with the invasion of the Ukraine. So we wanted to at least provide a perspective from a brief perspective on how we can view things. We know from the last couple of weeks that it has touched upon legislation in both Russia and the Ukraine. Maybe you can pull it up, Matt, what happened in Russia and the Ukraine, where they provided. So the Russian Ministry of Finance submitted a bill to legalize crypto investment and ban payments. So obviously there have been a positioning to move, like to get ahead of the sanctions that are now being imposed by the Western world to Russia. And of course, there has been a longer effort to make Russia independent from what those sanctions potentially might do. And on the Ukrainian side, I think we've seen something similar with the legislation that was just passed, where Ukraine outranks Russia in crypto adoption index. As war starts, they have also adopted a bill that was previously already written and I think now ratified, and it was last week. And we've seen some images that are pretty common in these times, where people are trying to take cash out of their bank, probably fleeing the country. This is like, it's kind of I know it's a really geopolitical discussion, but obviously this is sort of what crypto has been designed for, in a way, to circumvent financial system when you can't access your bank accounts. Similar things now connected to what happens in Canada with the trucker protest, where those who were donating to the trucker protest got their bank accounts frozen, and they were going after the cryptocurrency wallets. Both the crypto exchange as well were targeted, as well as the individual people, and they were even trying to go after the crypto exchange CEOs that were advocating for not storing cryptocurrency with exchanges. Just, you don't have to dwell on this a lot, of course. That's not what we're here to talk about, but maybe around the stream here, any thoughts or any context that you'd like to share?
Yeah, I can start with a few thoughts there, Frank. So particularly thinking about that picture of people withdrawing cash in Ukraine, and then the second article there with Ukraine outstripping other markets in terms of crypto adoption. And I think, this is one of the first kind of geopolitical situations we've had where the crypto industry is established to a point where a lot of people, or a fair number of people, have got access, are kind of familiar with the technology. And so in the same way that people turn to cash now, I think you are seeing people turning to the digital assets. I think the other thought I had was, part of the attack this morning has come in the form of cyber attacks on government bodies, but also financial institutions. So thinking about some of the security aspects, but also the trustless aspects of Web3 and how, that's not regulated or controlled by any single party, is quite interesting in this context too. And then the other thought I've just had there is thinking about, the West discussing severe sanctions this morning, and thinking about, are governments around the world sort of up to speed enough with the tech to think about sanctions and applying those to digital assets? I think possibly not. I mean, there's probably a bit of a lag there, but, if sort of crypto continues its rise, then I think there's going to have to be discussion of how kind of governments, and this may be at a global level, can maintain some kind of control. Although obviously that does go against a lot of the ethos of this decentralized ecosystem that's being built. So yeah, it's an interesting sort of experiment, I guess, with the crypto system under these conditions.
Mm-hmm. And any other thoughts from Susie or William?
I mean, Helen picked this up quite well on the top level, on the macro side. I think, for us in particular, we had a lot of companies that have currently developers, employees in the portfolio companies in those locations that are currently quite heavily affected. So I think we spent the last, 6 hours of our wake time today just trying to understand whom do we need to support in which kind, and, where do we think about relocating employees. So really going down deep into portfolio and thinking about the personal implications that this will have for each and every one of us, but in particular as well for companies that are relying heavily on having their base currently over there. and what we can provide as a fund to also bring people into a safer space.
Yeah, just lastly, I think just echo what Susie and Ellen says, but I mean, obviously what's happening in Ukraine is the elephant in the room, and it feels a bit petty talking about crypto in that sense, but the ethos of, decentralization is really topical here, and this is maybe the first time we see like a big use case where we can actually, see what happens and learn from that. So maybe there's some positive outcomes there, as in regards to crypto at least.
So, okay, let's make then that bridge to talking about theses. Of course, this is a very like macroeconomic, like coming back to the Genesis block of Bitcoin. I've been around long enough in crypto to remember, the first block with chancellors or like with the bill out that's like tied into the Genesis block of Bitcoin, which it's always been political, right? Crypto in a way, but from that, we've seen a huge evolution over the past decade. And of course, we've evolved from just that political part of crypto to, okay, what else can we do in Web3 and this, not only the decentralization, but also what else can we do from a data perspective, from a supply chain perspective, or whatever angle you'd like to look at. So it would be interesting to compare kind of notes on what the core thesis is for the different funds. Maybe starting again with Ellen, and then we go around.
Ellen,
or just interest, just of course the interest on what are the most interesting things you're seeing. Ellen?
Yeah, happy to start there. So when I think about our approach as a fund to the digital asset space, I think there's really two key themes that we're pursuing. The first is we are very interested in kind of the fundamental tech innovation that we see. And I think that starts with blockchains, and then it builds with smart contracts, and it builds with NFTs. And we're very interested in how these technologies will be applied in the future financial system. So, but at the same time, we appreciate that's very early, and a lot of the investment activity in that area is through tokens, which we don't do ourselves as a fund. So we've kind of sought ecosystem exposure to early stage protocols building with these technologies, and we achieve that through two fund-of-fund investments that we have. One fund focuses on DeFi, it's called Parify Capital, and the other focuses on NFT infrastructure, it's called Fermion. And then the other kind of major theme that we're pursuing is all around infrastructure to onboard assets into the crypto asset class. We believe that crypto will form part of any balanced portfolio in the future for both institutions and retail investors. And we think there's just sort of once in a generation opportunity to be investing in companies that are building the market infrastructure to support this transition. So that's where we're spending a lot of time and where we're doing our kind of more typical equity investments, which look like a kind of 10 million check in a Series A or B round. So we've got two investments there today, Gemini, the large US crypto exchange, and then Tesseract, through a company based in Finland, and they provide institutional credit products.
We had them on the show. Yichen.
Brilliant.
Yeah. Oh, I hear an echo. I don't know if that's me or somebody else.
Yeah, so I'll let the others jump in there, but
just on the fund structure, is like so when people invest in Augmentum on the London Stock Exchange, what is the ticker symbol? And are they then exposed to those funds, or they're indirectly, or is it only if they go directly in those funds? Like how do you talked about a couple of funds that part of it, right?
Yeah, so our ticker is AUGM on the London Stock Exchange, as I said. So the Augmentum Fund is a permanent capital vehicle, and buying one share gives you exposure across our whole portfolio. So yes, you will get a small piece of exposure there. I think our crypto allocation is around the 10% mark, which is what we feel is kind of appropriate right now. As I said at the beginning, we invest across fintech, and we have lots of different verticals represented in the portfolio, but it's about 10% crypto today.
Okay. Sorry, Susie, go ahead.
No, you go.
No, I had nothing important. Go ahead.
Maybe I was just actually wondering, Ellen, how do you think about maybe investing in tokens in the future? Is this going to be a separate vehicle, or how are you currently?
That was exactly going to be my question.
Oh,
actually. Yeah.
Mine's alike.
Yeah, no, exactly.
Yeah, it's an interesting conversation that we have as a team. We would be open to different options. I think in terms of looking at whether it would be a separate vehicle, I guess, we would definitely want to be speaking and like engage with our public market investors to understand, would they like more exposure through direct token investments within the existing Augmentum Fund, or would subsection of them like to actually have a dedicated fund? And it's interesting seeing some of our more traditionally structured peers, who a lot of them are going down the route of a separate token-based fund. So that may set some precedent as well. We'll see kind of how those.
So of all of you on the call, like, do you have a structure to do SAFTs and like invest in tokens, and how have you structured it? I guess there are different ways to do it. Whoever wants to go first.
It's such an interesting question, Frank, because I think I've been asked this question now about 100 times, just as much as my fellows here on the call probably had it as well. But I think internally for us, because Fund 8 has been a previous fund of 2018, so it's been a little bit around. And back then, honestly, we weren't at the brink of seeing the rise that we have seen, and so we didn't really anticipate to begin with. So the LP agreements, they didn't really allow for that structure to be changed today. But I think now with everyone realizing that, we should be thinking about a better way to structure things, we have had a personal, just check in with a lot of the LPs just to see what the appetite is for actually going down that route. And so we have the sort of flexibility today where we could also just do pure token rounds. So it doesn't have to have any equity component at all. But the true preference as of Fund 8 still is slightly more toward the equity side.
All right, but you've created the legal structure for doing so at least. Okay,
correct.
Interesting. William?
So we could do it. Yeah. We're still not 100% at the level where we really push for doing pure equity token rounds. So
have you done it?
Yes, we have done 3 now.
Okay.
So it's not completely new to the game, but yet I believe, it's still relatively small tickets compared to the overall fund size.
Of those 3 investments, what were the nature of the tokens in terms of what kind of, stable coins or a governance token?
Very structured.
Okay.
So nothing too exciting, I guess.
Can you disclose which ones, which investments those were?
Well, 2 of them are still in legals. We really started to push back about when I joined back in last summer. So before this, I think we were quite heavily on the Web2 world. And so things are just slowly coming together. One of them is a little bit more on the B2C side, where it's about social play to earn. And then the other 2 are slightly more on the insurance play, where we think that there's going to be a lot of things happening around insurance backbones. So how can we actually bring smart contracts, not just into fintech, but also into insurance?
But the actual token economics of those tokens, because of course, if you do a stable coin versus a governance token, they have different legal implications, which might touch upon your fund structure, whether you're able to do it or not, right?
Correct. So all of the ones that we have today fall in the first category, but that doesn't mean that we couldn't also extend into anything else.
Okay. Yeah. Okay. William.
Let's wait until the legals are closed and I can tell you all the economics.
We have to get you back.
We're still going back and forth on minor details, to be honest.
Yeah, I mean, on our end, we, I think maybe it's since Fund 8, so the fund previous to this one, maybe Fund 7, that we started investing into mixed token equity rounds. So we've been able to do that for quite some time. I think have been our preferred way of doing it today as well. And we have a few investments that actually have tokens, so like Grow.xyz, it's a London-based DeFi neobank, and LivePeer, which is a streaming protocol out of New York. So quite early on to that, and haven't been any issues so far. And our LPs
that's good to hear.
How do you see that dynamic between equity and token? Like, how is that? Is of course a friction point as well, right?
Yeah, I mean, it's a super interesting question, which we debate quite a lot internally as well. Because on the one hand, it's about where do you think most of the value will accrue, right? Is it in the equity or is it in the token? And sometimes, if you invest into a company that already has a token structure and a treasury already set up, that is easier to kind of work out. But sometimes you invest into companies in equity and then at some point they might release a token, then there's another level of complexity. And will there be a utility token as well next to the governance token, and will that be the one that accrues all the value? So there's a lot to think about that, and that's why I think the parallel tracks with investing into equity and tokens are quite a good way of balancing risk reward for investors. But there's several ways you can slice it probably.
What's the most common structures that you see, like in terms of the type of tokens, the type of equity, or the combination? What is most appealing as well from a venture capital point of view?
I mean, super quickly on our end, I think I've started to see more pure token rounds as opposed to equity or a mix before. And I do feel like they're like Web3 native funds probably have a preference for that. I think like more Web2 Akin funds probably have a preference for a mix, but we're seeing increasingly many pure token rounds. But I think it's just something we have to get used to. But I mean, it's also something you can discuss with the founders, and maybe you can do part equity and part token, even though it's set up as a token round to begin with.
Okay, going back maybe to you, Ellen. Maybe some specific deals that you can talk about, and what was the thinking behind investing in those projects?
Sure. Well, I will talk you through some of the thinking behind Gemini and Tesseract. So with Gemini, who are very well established in the US now, major retail and institutional exchange, and with a very broad set of financial services now, including custody, prime brokerage, yield-based products. They also own an NFT marketplace called Nifty Gateway. With Gemini, what we were extremely excited about was their track record on regulation, compliance, and security. I mean, this is a very central part of our thesis as well. We do believe regulation is, a key pillar for any company building a lasting business in this space.
Agreed.
Yeah, right. And
we've been doing nothing but since 2013. Yeah,
and in 2021, you saw regulators around the world really starting to engage, and I think there's only one direction of travel for that. And I think probably everyone on this call would agree we need regulation in this space, as we do across the financial services industry. So with Gemini, we see this incredibly strong foundation. They built with regulation first in mind from the outset. They've got an incredible track record, and as we think about the next phase of institutions and retail investors coming into the space, we believe that Gemini is top of their list when they think about who's a trusted partner to enter with. And joining the round that we invested in was the Commonwealth Bank of Australia, for example, and they will launch a project with Gemini to provide access to crypto through Gemini. So we're really excited about that kind of opportunity where Gemini can leverage their expertise on the regulatory piece and work with some of the most interesting institutions.
Because Gemini, I guess they were one of the first to get the New York license, and also
the FCA, and one of the first to get the FCA license.
Exactly, that was my second point. If you look at the list of companies that are regulated in the UK, most have not been able to get over that threshold of regulatory requirements, and I think Gemini is a handful of companies that have been able to pass that bar, right?
Yeah, and I think as well that, and maybe we'll come on to this in more detail, but I think there is kind of a bifurcation almost in the crypto market, and say we do go into a bit of a slower growth period for the crypto market this year. I think you've got businesses which have reached scale, have momentum, raise a lot of capital, who find themselves in very strong positions, and as Gemini have expanded the services they offer to their user base, they've made some really interesting acquisitions to bring in new services. So they bought Nifty Gateway, as I said, for the NFT space. They bought a company called OmniX that bolsters up their prime brokerage offering. And so I think when we look at Gemini, we also see a player that's at the real scale to kind of embed the advantage that they have and from being one of the early movers. So really excited about what's to come.
How much capital in total did they raise At what valuation, if you can disclose?
I think that both have been published. I believe the round was $300 million in the end. I can just check actually if the valuation came out, but it was it's a very mature valuation, and it's a later stage deal for us. We typically invest Series A and B. This is much more of a late round for us.
Yeah. And you expect this year to be at a lower pace at last year, because last year was kind of the explosion of venture capital, at least in traditional equity, to invest in crypto companies just by the time that we went public. But it's kind of interesting. Like last year was this you saw these enormous rounds go to a lot of different companies, but you would expect this year to see less, the capital dry up, or
I don't know how things. It's interesting because across tech, not just in crypto, but we've seen a bit of a sell-off to start the year, and I think that the general sense is that will first impact the later stage rounds. I think there's still a lot of early stage capital very excited about crypto. All of us on this call. I think my point
Hopefully.
my point there was more around should we see less growth in the broader crypto asset space this year. We feel that Gemini is very well positioned to kind of weather that and remain a winner. And I think smaller businesses, those that have raised capital can continue to build, but some of them may find themselves joining a bigger company, got the resources, got the established user base, and can build with the technology that they had. So yeah, but who can say where we're at? It's just sort of thinking about the different eventualities. Yeah,
we're gonna finish with price predictions then. Okay, Susie.
Well, I think Ellen touched on a few points that I rephrased actually yesterday for a YC event, where I was trying to say, we don't know where we are in the bubble. Is there a bubble? Are we in certain subsectors already at a hype curve? Are we still in the very early adopter phase? Do we think about a greater fools theory? So, we're coming today, it may be another on-ramp solution, but hey, have we actually reached a point of time where a lot of the current solutions are already doing quite what they should be doing? Do we actually need to fund another wallet? Do we think about, in the DeFi space, maybe we need another DeFi native front end? So we try to really map every single subsector on a hype curve and really try to form our own views about, where we believe that certain assets are still in line with pricing, and it's still high regardless. But the truth is, I think there's some sectors that are way more overhyped, especially on the B2C side. So I think our alpha at the moment seems to be on the B2B side, where we think that there's a lot of effort that still needs to be made. From a regulatory perspective, to come back on the point we started a conversation with, I think once regulation really kicks in, we're going to see a lot more opportunities around everything it has to do on that space. Equally, how can we make sure that incentives are really aligned across the different parties, from the developer to the end user, and think about structures that actually enable those services to be in a very good state, which I don't think they are today necessarily. And so I think a lot of pieces are still yet coming together, but we are seeing, nothing but positive trends still in the early seed and Series A stages.
And what kind of B2B kind of use cases do you see that you find interesting or that you've invested in?
Well, I love everything that is actually making it easier for people to be KYC, because I think all of us have heard about all the scams. There's been another one like Soul Chicks. I don't know if you followed that one in Hong Kong, where
Not
obviously, I think it's quite an interesting one. It's a bit like, Cat's coin. So in a way, a lot of hype around of, volatility coming in, and then valuations went up, and all of a sudden it turned out to be a massive scam. So I guess understanding if we actually believe in certain aspects has really shaped a little bit our view around what is a hype, where do people just jump on the bandwagon because it seems to be quite hot, and where do we actually come out of in terms of what is required in terms of regulation, KYC, understanding how we can map identities to wallets, and how we can actually avoid having any sort of fraudulent misperception that people had in the past around everything that sounded like Bitcoin. So ironing out everything that is not helpful in the idea of building a trusted decentralized system that's sort of what we're starting at the moment.
And you touched upon regulation. What is the biggest regulatory change you would want to see in order for that to sort of accelerate on the B2B side?
Oh, damn. If I knew the answer, I wouldn't be sitting there being on
I had a discussion with somebody who's trying to start a fund. None of you. But
I wish I knew the answer.
And she's starting a fund and looking at the B2B sector as well. And in that discussion, we really talked about the taxation part being an issue, right? So if you're thinking about invoicing, you're thinking about moving funds around, the problem is that it's nowhere recognized at legal tender. So you still have that capital gains problem in whenever you hold crypto assets, which is my preference of, can we make it legal tender already? But I think that's going to be quite a journey with all the smaller countries and challenger countries that are starting with doing that, like El Salvador, and then maybe it will trickle down, but likely not happening on an EU level anytime soon.
Very true. I think tax in general is one of those topics. I don't think any one of us feels particularly, excited necessarily to look at another tax-based solution. But the truth is, there's going to be so much needed for a large institutional player to actually develop a system under which they can efficiently and effectively roll out anything that has to do with providing, as in a wealth management solution for the high-end net worth clients that is allowing them to also invest in crypto while staying under the regulatory frame of actually paying the taxes within a smooth experience. So, again, a field where I think regulation, tax, identity can come together and hopefully create a big outcome.
Identity is a very big, that's a whole show on itself to talk about, about it. And any specific project you want to do a shout out to that you that HV invested in?
I mean, we do like a company called Janus, for example. I'm not sure you've come across those ones. It's very, very early. It's essentially one of the KYC plays that I love, because it essentially allows anyone and everyone to map their identities on a wallet and then sell those data points back to the regulator. So think about a very decentralized way for the regulator to access personalized KYC data. It's very early, but
What's the name of it? Sounds interesting.
Oh, good. Hold on, I'll put it here, Janus.
Yeah, we should share the link. By the way, I think Nathan was doing a live press conferences, so our live view is probably a little bit challenging with a live concert, of NATO. Okay, so we have a link here. Maybe we can pull it up the screen, Matt. Yeah.
Looks pretty cool, huh?
I wonder where's the name from? Which country? That sounds like a kind of.
Janus, that's the two-faced god, right?
Say it again.
Janus, that's the two-faced god, right?
Yes, damn, there we go. Yes. I was about to say it's a Greek name for the two-faced god.
Interesting. I like the name.
It doesn't translate well in German, I'm not going to lie, but in English it sounds a lot better.
The world's largest crypto, what did they say now? The world's largest crypto wallet to identity database. It's interesting. I mean, there's been a lot of identity plays in general. Like I invested early in, what's his name? Civic, which was also like a digital identity play. And then you have a lot of the traditional players that try to also create the global database. You have like Yoti, you have Onfido. It's like there's so many players. And then you have the banks that try to play it in that field as well.
Correct.
Everybody's fighting for the same space. But of course, with a blockchain-based solution, at least the user retains kind of the ownership over their data. Is that also the setup of this company?
Yep. And you couldn't have said it better. That's pretty much the pitch. That
I've seen it. Been tried a couple of times, right? So it is the most sensitive data, and it's also like it is definitely like so. Identity is such a big problem because of what it ties into, what it enables as well. So if you're, of course, from the we recently had this DAO where there was a anonymous DAO founder. It turns out to be a guy who was convicted. Like, okay, that's one example. And then you have scammers, and then you have money moving around and these identities, and then you have random funds moving around. So some of that identification, but also then the onboarding and the portability of user data between different functions is going to help with having identity solutions. But I haven't seen that work at scale, but neither in the traditional.
Maybe we will,
So I'm curious, like, what the angle is. Maybe it's the timing, because the timing is more like I think we're getting closer to the timing making more sense, also with the regulatory space changing. But what is there anything specific that you can point to in this solution that they do different than, for instance, those that I mentioned?
I think at the end of the day, this was very much a team bet. So the guy that is building it is a 22-year-old, we call it a UK wizard. Think about someone who really has started at 16 to work for the global HQ, which is part of the MI5, MI6, right? The global headquarters of communication. Quite a hacker. He just knows his way around certain products. And honestly, the way that he was describing how he gets the credibility at such a young age to sell to regulatories, governments, has been nothing but mind-blowing to me.
Somebody's going to crack it, and they have at least a good name.
Again, it doesn't translate into German really well, but I'm happy that
purple websites. VCs love purple websites, especially as it comes to Web3 companies.
All right, more purple. You heard it here first. You want to get William's attention? Make it purple.
Yeah, actually, I think Gemini is pretty purple as well.
There we go, Ellen.
Good.
All right, so then I guess we move on to William with a portfolio pick of the week.
Yeah, portfolio pick of the week. I mean, there's so much to be said, and like just kind of disregarding our, a few of our portfolio companies for a second. I mean, Web3 is so fascinating because it is essentially the new, the evolution of the internet. So you can spend like all of your time on it. So that is, why it's called a rabbit hole, right? So,
which you do.
Which we do, and like doesn't get any, don't get any smarter by spending a lot of time on it. More confused, to be honest. But it's super exciting. But I think what I'm trying to say is it's important to have a thesis and decide, which subjects or topics you spend time on. And I think we think about it in a few different lenses. Wendy, who's our crypto and Web3 lead, she's a partner in New York and has led almost exclusively all of our Web3 investments over the years. She's always been excited by the very kind of deep Web3 stack, the middle, where, I mean, one of the companies there is Magic Link, for instance. And whereas I am spending more time on kind of broad strokes, Web3 thesis around, how do we kind of bring the first billion users into Web3? And, one can say like, hey, there's enough wallets, there's enough exchanges out there. But if you're starting with crypto, you'll see that the user experience is just broken. Like in Sweden, Safello is probably like the best company when it comes to bridging new users onto crypto, right? Because it's very straightforward and it's very easy to onboard. I feel like we're going to
Thank you, William. What did you say? Yeah, no.
well, we're also investors, right? So
it is true. Yeah, that's true. But it is a UI. It's a UI UX problem.
It really is. So I do feel like there's going to be room for new wallets, new on-ramping solutions. I mean, games are probably going to be a big on-ramper of users into Web3 as well. But just mentioning one company that I'm super excited about is probably Grow.xyz, which is a DeFi neobank out of London.
Can you link it so we can show it?
Yeah.
Then Matt can pull it up.
Grow.xyz. It's basically a DeFi neobank. It sounds, sounds pretty broad, but
purple. Hey,
right? Yeah, we only have purple Web3 companies in the portfolio.
Damn, if only I knew. We're gonna make Safello purple.
But I mean, in the essence, it's about making, cracking UX in DeFi and Web3, and as long as you can do that, you will be able to serve such a wider audience. So, I mean, this is just the first step of that, but everyone who's kind of ventured down the crypto rabbit hole, you start with a, Safello, or you start with a Coinbase account, and you add a wallet, and you realize that, downstream from that, there's so much stuff that has to be solved, right? Just the user interface, just kind of dashboarding to see, what are your assets? How do I even tax them? What happens if I stake them? What is staking? So I feel like I'm spending a lot of time on these broad topics just because I feel like there's so much more to be done there. Equally, we're super excited about kind of the deep Web3 stack. But then again, let's say DAO tooling, for instance, like that feels like it's really day zero still. Whereas, wallets might be on the top of the hype curve, but I still feel like there's room for development there. So yeah, we just have to kind of make up our mind where we spend a lot of time, and we try to think about, the world in those ways that we bucket it a bit and see what, where we find real excitement.
Should we talk DAOs?
Should we talk DAOs?
No, so I saw some interesting DAOs are also a pretty good example of where there's this initial interface for how people are collaborating and doing things together. So you have like Discord, where people are like fiddling around with how do we create this decentralized organization, and they're using some kind of voting system that is not necessarily decentralized at all to do the voting, but it's a huge growth space, of course, and maybe one of the big themes for the next adoption wave, alongside with, I don't know, layer 2 solutions or bridging or whatever.
Maybe like a quick note on that. One of the reasons why I'm excited about DAOs is that it's one of the few use cases I've seen so far that is not about making money, because today a lot of Web3 has been about making money in different ways, and I feel like Web3 is so much more than that. So if we can kind of find those use cases where the main priority is not to make money, but rather, serve something else, I'm pretty excited about it. But maybe, we're still too early on that curve. But yeah.
Any other thoughts on that, Ellen? Susie?
Actually, William, that was really mind-blowing because it's so true, and I never thought about it. It is not the core of what most of these plays are all about. So let me think about this for a second. But I think it was a really good point.
Yeah, thanks.
Okay, well, Susie thinks, Ellen?
Not a huge amount to ask here. I mean, to add here even. Sfermion in particular, the NFT infrastructure fund I mentioned, pretty excited about DAOs, and so learning a bit through them, but not spending as much time on it as it sounds like Will is. I think I'm quite interested in how you might apply a DAO structure to kind of the role that some financial institutions or some financial services play. So like a wealth management DAO is pretty interesting. We've seen some of these examples of DAOs spinning up to purchase particular assets, and DAOs who own an NFT collection. I like that pooled approach and thinking about investing together as a kind of crowd or group in certain asset classes. I think that's quite exciting, and takes away that middleman, as so much of Web3 does.
Yeah.
So yeah, I'm excited to see kind of how financial products evolve under the structure of DAOs.
Any specific projects? I mean, I've been talking way too much about Blackpool token, but it's exactly the example of like they create like a decentralized hedge fund for NFTs, right? So and they invest in all these different, and it's a very good use case to pool funds together to do that, then to in a decentralized way work together, which only kind of works if they are, I guess, decentralized assets. Otherwise, you get back to the regulatory problems with centralized entities. So NFTs are pretty perfectly suited for that kind of model. I don't need to pitch Blackpool token more. They might go on the show one day. They're interesting. Interesting. They received like 6 million as well in funding lately. Any other
something like a yield guild is pretty interesting. Buying game assets and then like renting those out essentially and earning yield.
Yield gaming guild, you mean?
Yeah. So yield guild is probably the best known there, and then there's Pleaser DAO in the kind of high-end NFT space. What
is Pleaser DAO? I should know that. I don't know.
So Pleaser DAO, and hopefully I get the story mostly right, formed around an NFT artist called People Pleaser, and she had created an NFT around a certain project, and that was going to be auctioned off, and lots of pretty like heavyweight crypto DeFi people came together. They created Pleaser DAO to purchase this landmark piece of art. And then it grew from there. And so now they have a really incredible collection, and they all have a lot of their own personal capital, but they use Pleaser DAO to invest as a group. And I mean, that's an example of one that pretty exclusive. I think Blackpool is more like an open-ended fund where people can come and buy in, if I'm not mistaken. So again, it's interesting to see those different structures: closed DAO, more open DAO. And then obviously Constitution DAO was the one that got some real head.
Suni, have you collected your thoughts?
Little bit. I guess, the way I look at it is that there's almost like two kinds. You got the technically oriented one and then the more social oriented one. So if you just want to break down the space a little bit, at least, I think every one of us knows about the Friends with Benefits DAO, which is obviously quite on the social one. But then you got things like the Maker DAO, which is more on the technical side. So I think we're still trying to sort out a little bit what the different buckets will look like. But in terms of what we probably would be more excited about would be everything that's quite technical. So as in the second bucket of what I was just describing. Not sure I lost you there. William, what do you think? Where are you?
No, I wanted to pick up on something Ellen said around guilds, because I think it's a super interesting topic. But I'm going to stick up my neck a bit and say that, like, while I like the idea of you owning assets and, renting them out when it makes sense to get access to something or, perform better in a game, like the structure around those guilds where you essentially, have to buy assets in order to partake in a game. Like, in one way, I could see that as a flawed game mechanic where, in order to enter a game, you have to acquire these pretty pricey assets, right? And then, people with money acquire them and then they rent them out to people that kind of need to have them for their livelihood. As far as it goes for, me having fun, that's one thing. And sure, I mean, there's people in countries that have made, quite a lot of money playing these games, but I would rather see that they, took out the middleman. The middleman is actually the guild in this sense, and just, be able to enter that game directly without having to spend a ton of money. So I feel like the play and earn trend is more appealing to me in that sense, that you enter for free or very little money and then you kind of work your way up from there. And there will be loads of use cases built on that around, lending or renting out your NFTs or your assets, because everything will be NFTs, right? So that's the way to kind of capture assets in Web3. I'm not just so sure that the game mechanic around, having a high entry point is the right one. But that's not on DAOs, but more on the guild side.
So do you see any projects in that space that do that play to earn model or play and earn model in a way differently than the ones where you first need to get the assets to get played?
We're starting to see a few, and we actually did an investment quite recently, which we haven't announced yet, but it's like going in completely this direction, which I quite like. And it also fuels into, the metaverse, and I'm, not going to go out on a tangent here, but
metaverse, he said the magic word.
Metaverse, as this virtual place, which is, it's not, but
are you a metamate?
Exactly. But if you think about it, like, as the central and sandbox right now, like, for me, it's just like another second life, right? And it like, what is really the use case? Like me going around,
especially when you see JP Morgan enter, or who was it that opened up a
store like H&M in the sandbox, like. But if it's more verticalized around different themes, say, sports, for instance, then I think that, that is a much more contextualized offering that is more appealing to, people overall, rather than, just hanging out in another second life. Like I see it if it's Fortnite, because you're there for another reason, right? But then, it also happens to be a social room. So, just going off on a tangent here, but
good tangent.
Yeah,
we'll take it.
There's lots of excitement.
Yeah.
Yeah, just
Susie, sorry, Ellen.
A quick thought on your point, Will. I think because the NFT art and gaming worlds are still evolving, it's still, and this was always the same in DeFi, like, community sentiment really matters. And I think you do see those voices when there are projects like Blackpool, when there are projects like Yield Guild, kind of raising the hand and saying, don't really feel comfortable with how much power, this DAO holds, just because they have come to the space with a lot more capital than kind of your entry level person. And so it's interesting, again, to follow these discussions on Twitter, on Discord, and see where the community pushes back and says, we're not comfortable with you selling a portion of the NFTs to Blackpool. It's not aligned with the kind of ethos of the game, of the ethos of the wider space. So again, all of these projects have to be navigating that, and community sentiment is still obviously very powerful in this space.
Agreed. Yeah, pushing back, and as opposed to also the metaverse, where Facebook, how much did they spend so far on creating their version of where we all should be living in the future? It was like an obscene amount, right? Where like it's one, I don't know how much a percent of their workforce is now just working on the metaverse.
And it just goes against like the ethos of Web3 with having one centralized
10 billion.
10 billion.
Like,
big bet. Susie?
Well, maybe just actually picking up one of Will's comment. So I guess we also spent a little bit of time on guilds recently, because it feels like the new little hype that is coming our way. So on our little hype curve, they still feel on the early side. But then again, we've seen more and more, especially one, for example, called Oasis. So what they are currently doing is providing the sort of guild facility for players such as Axie. But then when you think a bit broader, what is actually required for some other players and players to just join the journey, you obviously need to have a really stable rental platform in the back. And so I think, for example, the one that I put in the chat called Rent.io is essentially allowing everyone to build out on those rails in a quite efficient manner. So, again, going back to my point around infrastructure, Purple
and 8-bit.
I know, it's sexy, huh?
Double down.
So, not providing much additional color, but I think it's quite interesting how not only is the guild phase evolving, but also the infrastructure layer behind it is picking up on that trend.
Very interesting.
And a unicorn, look at that.
A lot of VC signaling right there. Okay, we need to have purple, 8-bit, and there has to be a unicorn just to cement that idea that we're going to go there. All right, but it's interesting. It's cool.
It's purple.
It's purple.
One topic that just sort of picking up on that spend on metaverse that Facebook have already carried out.
Yeah.
And just thinking about, they're dedicating a significant portion of their workforce to this project now, and thinking about talent, because I couldn't remember where I read this, but apparently the talent risk from crypto is on the weekly agenda of Google's Exco. I mean, there is, and you wonder, what is Facebook having to do to sort of keep their talent in the walled garden metaverse, as well as trying to think about bringing users in. So I think there's I think we're probably all experiencing like the war for tech talent, but within crypto it's even more acute. And it's interesting to follow kind of how things are moving in the US. And I think Europe backs a few years, or maybe one and a half years, in terms of talent migration into crypto, but we're definitely seeing it here as well. Yeah, perfect article.
Yeah, definitely echo that. I mean, I've talked to a few big fintech players here in the Nordics, and they're just saying like all the developers we're going after are going, rogue on Web3 instead. So we have a really hard time hiring. So, and if you just look at like the number of developers that have come into the Web3 the last 2 years, it's still like it's slim picking. It's like 20,000 monthly active users or something like that. But it's twice what it was 2 years ago. And with these new toolings like NFT Port, Morales, Alchemy, like you kind of remove that, threshold and make, it's almost like you remove an abstraction layer for developers to enter like Web3 creation. So it's super exciting to see what happens in the next few years.
Facebook Mark's vision of metaverse did not sell too well, though.
No.
Okay. Yes. I mean, even like cryptocurrency companies like ours, they're essentially centralized companies, may not have still trouble like retaining the talent that obviously come into crypto, excited about crypto for Web3 and decentralization. So it's not even within fintech or tech companies. It's even within the crypto space. There's also a migration of talent where you still have to really work hard. And I think the same issue is with Coinbase. There's plenty of people I think that are moving away from Coinbase to start their own DAOs and their own projects. And there's a lot of freedom in that, of course. But in terms of mission building, I think a lot of the DAO models still need to prove that they can retain that talent over time. Because what I think is happening with a lot of DAOs is that a bunch of people are coming to it, excited in the first phase. There was recently I saw a Twitter sort of thread on this that described the dynamics, and then it sort of dries up and people are done with it, and then it starts dying down. Okay, and if you then don't have the capital or you don't have some kind of mechanism to pull that through, then of course you have something that starts with a boom, maybe with a bunch of capital, and then it fizzles out really quickly. It's going to be interesting to see where longevity is for some of those DAO projects out there that we're seeing that are able to retain talent and capital flowing to them.
What I'm still trying to sort out, Frank, is, let's say this current wave of Web 2 companies that are trying to provide classic Web 2 businesses and services to those DAOs. How are they going to evolve, right? Because at the end of the day, we have a very, very fragile customer base as an ICP. And the question really becomes, how are the DAOs going to evolve? And so if I'm selling them a B2B SaaS solution for the onboarding, do I really believe that this customer group will exist in, 2 years from now or not? Obviously, I personally believe that there is going to be a trend and there's going to be a continuous adoption. At the same time, I think it's really, really hard to price this customer group.
Right. And I mean, it goes really quick, but they also grow really quick, right? So the speed at which they can grow and then inflate, deflate. I mean, William and I were talking about Luke's Rare. I think maybe you can explain what Luke's Rare is and what is excited about it and why it's terrible.
Okay. So it's a decentralized marketplace like OpenSea, but decentralized, and basically all the revenues go back to the token holders or those token holders that stake them. And the API has been crazy. So you could make, like, in January, you could make 600% per year or something like that. It's both in the coin and in wrapped Ethereum. The problem is that all the traffic has been basically washing. So it's been big NFT holders that basically sell their assets to themselves and they make a buck on that. But the notion of it is very much in the ethos of Web3 with these decentralized services. So I really like it from a fundamental point of view, but there's still some things to figure out there, I feel like.
Right, that's the nice version of that one. So it's a wash, trading, pump and dump. But no, there's innovation there. So we don't have a lot of time left. So I was just like to go through to each of you with maybe a final prediction or whatever you'd like to share before we finish up. Ellen, would you like to start?
Yeah, do you know, a final thought I'd like to share is just thinking again about that talent piece. So we're seeing the war on talent across tech and in financial services. The people struggling the most are the incumbents, the traditional banks to hire any kind of crypto talent, and then it's the tech companies, and then it's the centralized crypto, and then it's the DAOs. And I think that's one of the reasons that I really do believe in this one-time shift to build crypto native market infrastructure, because while incumbents will enter this space, I feel they are very far behind, and talent is a key area which they're really far behind on.
Agreed. Susie, thank you.
I think Ellen's point is probably a lot more sophisticated than mine, but I think what I would want to see at least happening in the next 3, 4, 5 years is that people are not just following the hype and Web3 sounds sexy and cool, so I'm just going to put it on my title, but actually start to dissect a little bit what's happening in the background, just as much as you've done, obviously, Frank, way before me. But I do believe that in order to actually make sure that the inherent value of what those opportunities can bring is a bit better in line with valuations, because if they keep rising at the current pace, I think it's going to be a bloody hard game for the entire space and ultimately even ruin the game for everyone. If we don't find someone else who's coming into our fantastic early stage deals at the moment for the Series B round, let's see how long the music goes on for. Even though it might be the best product, depending on how the hype cycle will turn out, it's not going to be in the best interest for the bigger community. And as smart people have said, we don't want Web3 to be just a play for VCs, right? So at the end of the day, I really want this to become something that the community can benefit, especially in the retail side. And so I just hope that the community doesn't self-enforce its own pattern to a degree where ultimately it's just going to implode.
Are you quoting Jack Dorsey there?
A little bit.
I think it was Jack Dorsey, no?
Yeah. Yes, it was him.
Yeah. Okay. Pricing. I mean, pricing. We didn't talk about pricing, but obviously, pricing in general is kind of an interesting subject
Yes.
on the token models. And next time, William.
Yeah, I mean, I gotta echo what Ellen said, because I think it's just spot on how we view the world as well, in the sense that, like, which Web2 companies will make the leap to Web3? Like, very few will do that successfully, which is why we're not excited about, in general, not excited about companies trying to kind of bridge that. We feel like Web3 native companies will win out, just in the same way as kind of Web2 companies won out over Web1 companies.
Makes sense. I would say, like, we're bridging that, but I mean, it's more like helping people bridge it, because ultimately you still need infrastructure. Like, just like we speak from our perspective, for instance, banks, like, are old banks going to disappear? No, they probably want to integrate, and it's going to accelerate. It's a boring job, but somebody's got to do it. That's the way we look at it.
Yeah, but you solve like the entry point for new users, which is super valuable part of the value chain.
No, we don't need to get in. Okay, to finish off, from my perspective, I think it's just cool to see, funds and companies, venture capital firms like yourself, kind of changing your model in thinking of how to structure funds and how to structure things in order to do kind of new kind of models, whether it's, getting rid of life cycles to be able to stay longer, to maximize sort of the journey that these companies might be in, or being able to participate in token models. So on that note, I'd like to thank all of you for joining. Good discussion. Maybe we can do it again. It would be great. And that was the 16th episode of the Safello Show. Thank you for tuning in. Until next time.
Thanks, Frank.
Yeah, thanks, Frank.
See you guys.
Thanks.